getting the initial rates that are coming in there. And it's a little bit more tricky for the bulls.
For us, it's been a story of a struggle right from the morning.
Actually, market has arrested the fall. In fact, slight bit of recovery has been seen in the market.
Today was one day when we went below the Thursday low. Last week, Thursday, when we had that big down day, we've tested those levels. We were trading below 19,500, but the bulls are really trying very hard to, I think, defend what are some very crucial levels.
Pretty much around where we opened. I mean, 19,522 is where we are at on the Nifty. I think which is 0.6% loss, less than 0.5% cut on the Nifty Bank.
Hello and welcome to Markets Today. I'm Sonal Bhutra and here are the top market headlines for the day. Sensex and Nifty decline after a range-bound session. Mid-caps outperform and the index closes in the green. Nifty Bank slips over 180 points. Metal and auto stocks end with cuts while PSU banks continue to move higher. Vedanta shares rise after announcing a six-way split as investors hope this move can unlock value. Anil Agrawal says steel asset sale will be completed this fiscal and a strategic investor is likely to be roped in for oil and gas. Copper and zinc businesses plays down fears over debt and promises to honor all payments due in 2024. September auto sales numbers paint a mixed picture. Maruti Suzuki sales figure comes below analyst estimates. M&M witnesses strong SUV sales, but tractors are a drag. Hero Moto and TVS sales exceed analyst estimates. Bajaj Auto two-wheeler sales show a drop on account of a higher base last year. MGL gains after it cuts gas prices. Federal Bank gets a leg up on reporting strong advances and deposits growth in the quarter. Marico surges after ICICI Securities gives its medium-term growth target a thumbs up. JSW Infrastructure makes a strong debut. Crude oil prices fall over 1% after touching a three-week low in the previous session. Separately, metal stocks slip, tracking a rise in dollar index. Nifty metal falls nearly 1%. Okay, straight to the market action now. The Lal Street ended in red after a range-bound session. Nifty and Sensex fell 0.5%, but Nifty managed to stay above the 19,500 mark. Banks fell in line with the blue chips, but the mid-cap index outperformed yet again to end in the green. Prashant Nair joins in with a wrap. Prashant.
Well, we came in this morning with 2 days of global markets to react to, and it was not a positive picture. Stocks did not do very much, but US yields on the 10-year had risen to fresh 2007 highs. Dollar index was at a fresh high for 2023. But the silver lining was oil, which had suddenly dropped 5%. So it was 2 up, 1 down. The market started on a tentative note and pretty much ended on a tentative note, although at midpoint there was a sort of glimmer of recovery. Let me explain. So the Nifty intraday will come up on your screen, down about 0.6% or so. The Bank Nifty ending just under 0.5% or so lower. The mid and the small cap parts of the market ending higher. The small cap index doing better than what the mid cap index did in a trade today. In terms of specific stocks, you had on the large caps losses coming through in these old economy sort of names: ONGC, NTPC, Hindalco. Auto names like Eicher, Maruti were under pressure, and Dr. Reddy's Laboratories also sold off. Gains coming through in the Bajaj twins, both Finance and Finserv, and L&T was the other one, which has been having a fantastic run over the last many weeks. Advanced decline slightly skewed on the negative side, but not by a huge degree. MCX was down. Friday was a big flip-flop, and today it sold off 4%. Delta Corp under pressure. Gujarat Fluorochem, Idea Forge, completely bombed out since listing. Cyient, DLM, and Voltamp Transformer was another one. Voltamp, by the way, was the big underperformer all of last week, and it continued today as well. Gains coming through in names like Union Bank, Ujjivan Small Finance Bank, financial names, PNB Housing, Dhanlakshmi Bank. These consumer names like Metro Brands, the shoemaker, Safari, the luggage maker, Liberty Shoes, these did well. MGL, EMS Limited, which is a fairly recent listing, HBL Power. Mapma India was a big winner the last fortnight, did very well this week, today. Heidelberg Cements, Arvind and Nureka were some of the others which did quite well. As I said, we came in this morning with cues which were mixed. Oil sold off, and the hope is that after this massive rally in both the dollar index and yields, both will take a bit of a breather when we come back tomorrow. Back to you.
Prashant, thank you so much for joining us with that market update. But let's get you some market opinion. Andrew Holland, Chief Executive Officer at Avendus Capital Public Markets Alternate Strategies, said that it is important to watch government and private capex before general elections. He's also expecting more downgrades to IT earnings.
It's very difficult to say what the government might do ahead of any election. So I'm not really playing into that theme of consumption because of elections, and haven't done in over the years either. I think, you know, what I was going to say is that the government capex, along with the private capex, will have that multiplier effect, and that's what's going to be the earnings momentum and the rising kind of earnings upgrades over the next 6 months to 9 months, as you kind of head towards the elections as well. Some of the companies have seen you know, a rapid rise in their share prices, and again, if you go back to that kind of 2004, 2007 period, I think you'll find that most share prices rose on the back of order wins. I'm not convinced that the IT sector is out of its problems yet, and we might see some more downgrades to earnings. That would probably be the time I'd be looking more seriously at the IT sector. But at this moment, I don't think there's any need to rush into it. It's defensive if you want to be defensive in a market which might be falling over the next few weeks. But otherwise, it's not going to give you that growth that you really want. You know, as we come into the results season, there's two sectors which I think the market are going to focus in on, and one is IT, which you just talked about, and second is the banks. So I think the key is what the commentary will be about NIMS.
Okay, all right, that's a market opinion coming in. Moving on to the second headline now. Vedanta Resources Chairman Anil Agrawal has called the proposed six-way split of the company as a win-win for all shareholders. Vedanta perked up in trade as investors hope the proposed demerger will unlock value. Nigel D'Souza is here with more details on this. Nigel.
The big talking point today was Vedanta. You know, and I spoke to the management, I spoke to Mr. Anil Agrawal, and there were 5 big takeaways. So let's run you through them. He believes that shareholders will have the flexibility with this entire restructuring process that he's announced. And he says that everyone will be on board because it's a win-win. So he believes that, in fact, the shareholders, the creditors, the government of India, everyone will give this particular announcement a thumbs up. Next up, he's talking about selling one of their assets. And this demerger is okay, but the bigger focus is going to be when they sell those assets. And he says that the steel asset will be sold. He's received plenty of interest. And by the end of this fiscal itself, that'll be out of their books, which is good news. Next up, he also says that besides the steel asset, well, he could be looking at bringing in strategic partners in some of the businesses, maybe in the copper business, maybe in the zinc business, or maybe in the oil and gas business as well, because he says, as of now, some of these businesses are not getting the real value. So that could be another option. Point number 4, which is very, very important. He says there's no need to worry with regard to Vedanta Resources debt payments. Remember, the street is a little bit worried because a couple of maturities come up, namely $1 billion in the month of January. And later on in 2024 as well, you have another $500 million or so. So he says both those two are secure. They'll be either repaid or refinanced, but no worries in terms of a default. And finally, he says that from now on, creating shareholder wealth is priority. He's going to be looking at corporate governance. And also he says that all these businesses will be professionally run. So those are the 5 big takeaways coming in from that interview with Mr. Anil Agrawal. In fact, let's hear out what he had to tell me earlier today.
This is a win-win for everything. 2/3 voting will be from our side, Vedanta Resources, which we confirm that they will vote in this favor. And I have no doubt this is to create a great value for everybody, including the government, including all the shareholder. For me, my shareholders are very important. Those opportunities will be phenomenal, and it will be very interesting for our shareholder. Pure play, somebody want to retain all this. Instead of 1 share, they will have a 6 share now, and they can have a more flexibility. We have a phenomenal response for our steel and iron ore sale, which can be taken care of the entire debt. And we believe that by March, we'll be able to complete the transaction too. Anybody want to produce green steel? This is the only site where we have a gas availability, complete infrastructure availability. As somebody want to produce 15 million ton, internationally, people are very keen to have some step into India. So this is the best opportunity for them. When the demerge happen, people are looking forward to invest because we'll be producing green aluminum, People are looking to take small equity, large companies, large private equity. They're looking forward. So whether it's oil and gas, they can be a strategic partner can come in. Oil and gas, copper, very, very keen people are there. Zinc, very, very interesting. Silver, recycling.
Okay, that's the big interview for the day and the big news as well about Vedanta. Moving on to the third headline now. Auto stocks closed in the red following a mixed picture in September sales. Eicher Motors and Maruti Suzuki are the top losers. Sales of Maruti Suzuki were below analyst estimates, with growth remaining in the low single-digit mark. M&M witnessed strong SUV sales. However, its tractor segment witnessed some weakness. Among the two-wheelers, Hero Moto and TVS sales exceeded analyst estimates, while Bajaj Auto sales fell owing to a higher base last year. However, Bajaj Auto and Maruti Suzuki believe that September has been a good month. Listen in.
Like Q1 was, about 128,000 average per month for us. And Q2 is 10% better than at 140. I think that in the subsequent quarters, we will see a similar pace of recovery, give or take a few percent points, because that's the nature of the problem and how the individual economies are mitigating the effects of inflation. It is sort of playing out slowly, but we are happy that things have bottomed out and looking up slightly. And of course, a big contributor in this is Nigeria. And the story is similar in Nigeria, though Nigeria is still ravaged by a lot of devaluation.
This year, and this, by the way, is not only the highest ever September, but the highest ever wholesale in any month in any year in the industry. So by absolute volume terms, I think it's been a great month for the industry, as also for Maruti.
Okay, that's the word coming in from Motown. With that, we'll slip into a break. When we come back, we'll talk about the other headlines that we are tracking. Welcome back. You're still tuned into Markets Today. Well, this is the fourth headline for the day. A lot of stocks which are on our radar today. First up, gas stocks. They were in focus, specifically MGL. The stock surged 7% in trade today after a lot of updates. The first one is that HPHT, that is the gas from difficult fields, that was cut down by the government, lowered by 17.8% to come in at $9.96 per MMBTU versus $12.2 per MMBTU. Estimates were $10.8 per MMBTU. So this has come as a big relief for these city gas distribution companies. On the back of which, Mahanagar Gas, it went ahead and cut CNG and PNG prices. CNG prices were cut by 3 rupees per kg, PNG prices were cut by 2 rupees per kg, which takes CNG prices to 76 rupees a kg and domestic PNG at 47 rupees per SCM. Now, MGL is getting the highest allocation when it comes to HPHT, higher priority allocation as well, and that's working well for the company as well. Additionally, there was an upgrade coming in from Jefferies where they upgraded the MGL stock to a buy, increased target to 1320 from 1100 rupees a share. They say that lower HPHT gas cost, highest priority in allocation provides strong margin visibility. And they also say recent OEM partnerships should aid volume growth for the company, which had been a problem in the past, but now it seems to be working on that. They've raised their FY24 EPS estimates by 6%, FY25 by 27%. This is on the back of higher volumes, which will also come because of price cuts and higher margins as well because of lower costs. So all in all, good macros coming in for MGL with good outlook on margins and volumes as well. Moving on now, Federal Bank gained 2.5% on the back of its business update for the second quarter of the fiscal. The private lender reported a 23% growth in its total deposits on a yearly basis. Abhishek Kothari joins in now with all those details. Abhishek.
Well, Federal Bank has hit 52-week high in trade today after reporting a strong set of business momentum that they have had in Q2 FY24. However, the CASA ratio is at 14-quarter low. So starting with the deposit growth, it's at 23.1% YOY and about 4.7% quarter-on-quarter. The CASA ratio has come in at 14-quarter low of 31.2% when compared to 31.9% in the previous quarter. And we are seeing a CASA ratio dip across industry given the fact that, customers are moving from low-cost deposit to better, retail term deposit rates. Calculation shows that in absolute value, CASA has grown by 5.5% YOY and about 2.4% sequentially. The customer deposit that's grown by 19.6% YOY and about 4% sequentially. Loan growth pretty healthy over there, 19.5% growth YOY and about 5% sequentially. Calculation shows that the CD ratio might have improved sequentially, right now about 84.2% when compared to 83.9% in the previous quarter. Back to you.
Okay, all right, that's about Federal Bank. But moving on, Marico surged close to 3% after ICICI Securities upgraded the stock to a buy. It also raised the target price. The brokerage firm believes company's earnings will see a 9% jump in FY23 to 25. Mangnam is joining us with more details.
Well, before the Q2 results season, we have the Q2 results preview season, and Marico's update is something that the street is awaiting. And ahead of that, there is an interesting upgrade that is coming from ICICI Securities. They've upgraded the stock to buy from add and up their target price from 610 to 670 as well. They've, penciled in high single-digit sort of revenue compounding over the next 3 years with a little more than mid-teen sort of growth in their EBITDA and net profit. They recently met the management, and the key takeaways were such that the company has, reiterated their medium-term volume growth aspiration of 8%, which ISEC likes. They say that this is the ambition to grow faster on a larger base as well. And if you look at their key products, the coconut oil portfolio is likely to grow well because of stability in copra prices and revival in rural consumption. At the same time, raw material prices have stabilized, and we've seen, a lot of the competitive intensity abate as well, as a result of which they will do well with their premium products, and that should aid their margins in the value-added hair oils category as well. If you look at their Saffola business, they believe that, while Saffola will see stable margins with decent revenue growth, the contribution of foods will increase a lot more, and that will decommodify that business, and that will sustain their margins too. Add to all of this, they have a portfolio of T2C brands which they believe will scale up as well. All these things put together makes a candidate for buy for ICICI Securities.
Thank you so much, Mangnam, for joining us with that. In more stock-specific news, JSW Infrastructure makes a strong debut on the Lal Street. The stock listed at a premium of more than 20% over its IPO price of 119 rupees and gained further during the day. This is the first listing from the JSW Group in 13 years after JSW Energy listed in 2010. JSW Infra's public offer was subscribed by more than 37 times. Arun Maheshwari, Joint MD and CEO of JSW Infrastructure, is confident that the company will be net debt-free post the IPO. Listen in.
The debt on the book post this IPO is zero. Net debt is zero. In fact, 5 years back, our total volume on the third-party business was only 6%, and today it has grown to 37%, wherein the volume has grown 3 times. Going forward, making 60-40 ratio or 50-50 ratio in favor of the group looks most likely in the coming years.
Okay, all right. With that, let's move on to the fifth headline today. Crude oil prices fell over 1% after touching 3-week lows in the previous session. This is on the back of a strong US dollar, rising US bond yields, and mixed supply signals. In precious metals, gold prices hit the lowest levels in 7 months. Manisha Gupta joins in with a wrap of all the action in the commodity markets. Manisha.
Well, October clearly hasn't started so strong for many of these commodities, which ended September, by the way, also on a negative note there. I'll start with the crude oil prices. We're trading at a 3-week lows onto this one. And in last 3 trading sessions, we've seen prices decline by nearly 5% already. The decline comes in from the fact that the markets are looking at higher production estimates coming in from countries like Iran, Iraq, Nigeria, Turkey, even Venezuela for that matter. Also, China has kind of stopped importing expensive crude and is either looking at petroleum products. The markets also will watch out for the 4th October OPEC meeting on what could conspire out of that. But ahead of that, we definitely have seen profit taking, and $90 a barrel for both the varieties clearly has been broken on the lower side here. The markets also are looking at weaker economic data and hawkish statements coming in from US Fed and the strength in dollar index, which is trading at a 10-month highs. All of that weighing on not just the crude oil prices, but on the metal as a space as well. So here as well, we have seen metal prices decline quite sharply. It was a day when you saw the underlying commodity fall anywhere between 2 to 3.5%. So much so that you have copper prices now trading at a 4-month lows. Tin is trading at a 5-month lows. Iron ore prices declined by nearly a couple of percentage points here. And we've seen prices decline in sense of aluminum, zinc. No metal really was spared. We saw a decline coming across board. The China on-ground data is not so strong. We are looking at inventories continuing to rise. The markets are looking at production on a higher side as well. And even as a long-term view is on the positive side. But for today, for right now, many of these metals are trading in discount. So if you wanted to buy copper today, it's trading at $60 off a discount as compared to 3 months away. That's exactly what we are looking at various other metal prices also.
All right, Manisha, thank you so much for joining us with all those details. And rising crude oil prices are taking a toll on oil marketing companies. Sources say that they're already incurring cash losses with the under-recoveries in diesel at nearly 10 rupees a litre. Sapna Das joins us. Sapna, what are you picking up?
Well, industry sources are indicating that they are already probably incurring some cash loss on diesel. Particularly, we're given to understand that the diesel under recoveries could be as high as 9 to 10 odd rupees a litre. And these under recoveries could have been higher had it not been for the set-off available against the export cess and the good refining margins of OMCs. So net diesel is not looking good at all. As far as petrol is concerned, I think here the under recoveries that are being indicated by companies is between 1.5 to 2 odd rupees a litre. LPG, there's no worry as of now, but prices are on the uptick and it's being closely watched by the OMCs. Now, the H1 for OMCs has been pretty cool till crude oil was trading at $75, below that, and then below 80 also. So that's going to help the companies cushion some of these losses that we are talking about. But if crude oil prices continue to be at $95 and above, and the upward range is not being ruled out as of now, then clearly it's going to be a concern, and somewhere this is going to impact the bottom lines of OMCs.
Oh, it will. They have been facing the issue of under-recoveries across most of the products. Thank you, Sapna, for joining us with those details. And with that, it's a wrap on this edition of Markets Today. Thank you for watching.